Hello everyone. In this video, we'll try to understand the concept of partnership, basically related with A-levels accounting. So, what is partnership? So, partnership is the form of business organization with the ownership of at least two owners. So, they need to have minimum two owners to form a partnership business organization. They can have more owners, but they need minimum two owners to form a partnership organization, and they need to agree to share profit and losses. Okay, this is very important point. They need to share profit and losses made by the business. So other important matters regarding to partnership that is decided in the partnership agreement. So what is the agreement, basic agreement? So according to Partnership Act 1890, agreement that is usually that can be in the written form or the legal documents or the verbal form. Okay, partners can make agreements in the written form, or there can be the documents, or even they can do verbally. It depends on them according to their mutual understanding. So according to 1890 governs partnership and state the right and duties of the partners. So these right and duties, these provisions are explained here about the ownership. So this act says that partnership involves at least two owners, and they need to come together to form and operate the business. Okay, so regarding profit and loss sharing, they need to share profit and losses equally. That means this act says profit and losses needs to be shared by partners equally. Okay, and the decision important matters regarding partnership are decided through partnership agreement. Whatever they have agreement, legal, verbal, or written, they do according to that. And legal framework, are governed by Partnership Act 1890. This is the legal framework. According to this, they plan, they decide, they operate their organizations. And that explains about the right and duties of the partners as well. Along with that, about the contribution, partners are required to contribute equally. Okay, about the capital of the partnership organization. And regarding interest, partners are not entitled to interest on capital. They are not supposed to take interest on capital from the partnership organization. And about salaries, partners are not entitled to take salaries from the partnership. And drawing, if any partners makes drawing, they cannot be charged interest on drawing. So these are explained by partnership agreement. Okay, so these are according to 1890. However, these depends, this can be changed according to their mutual understanding. And yeah, one more about the interest on loan, partners are entitled to interest at 5% per annum. So if any of the partners, there are few partners, okay, Ram and Shyam, there are two partners, and Ram wants to provide loan to the business, then he will be entitled to the interest of 5% per annum on loan that they make to the partner. So there is no interest on capital, no salary, no drawing. Capital needs to be distributed equally, and interest on loan is 5%. However, this agreement can change according to their further understanding. Okay, if there is no any agreement, these system will be followed, this agreement will be followed. But if there is agreement, they follow according to the agreement. You have to take note of it. So how to prepare the income statement and appropriation account? Okay, so in partnership organization, we prepare the income statement like the sole trading concern. So this is the revenue, this is the income statement format. We write the revenue, and if there is any return, sales minus sales return, so if there is any return, that will reduce the sales. So this is the net revenue. And about cost of sales, this is opening stock, purchase return, closing stock, like in the sole trading. I'm not explaining more about all this thing. And the gross profit or loss we calculate. So this is exactly like we do in the sole trading concern. So the incomes are added. If there is any receipt, discount earned, revenue earned, or any other earned, not revenue, interest on rent earned, or any other things, like any receipt, additional income other than revenue will add here in the other income side, and overheads are deducted here. So why I'm explaining this means there is one thing that we need to take care of. So there is interest on loan. So most of the time we get confused that if interest on loan, like if you have taken loan from bank, then we have to pay interest. Okay, that's the overheads, under overheads. So we pay, we understand it, it belongs to overhead. But sometimes we get confused. The confusion is about what to do if one of the partner is providing loan to us. Okay, it might seem that okay, we are providing interest on loan to them, and the money is itself within the organization, we feel like that, but we have to treat this interest on loan under overheads, not under partners individual heading here. Okay, not under appropriation account. Okay, it should be considered as the organization's expenditure overheads. So interest on loan to partner as well needs to be considered under overhead, and that's how we discover profit for the year. And after this, there are three sections here. You can see interest on drawing, interest on capital, and salary. These three things belongs to appropriation account. Okay, so this is the appropriation account. Okay, so interest on drawing, that means if there are two partners and partners are taking in drawing, then they have to pay interest on drawing if there is agreement. Okay, if there is agreement, they are providing interest on drawing. So organization receiving, okay, receiving the money, so this should be added. If there is interest on capital, if there is no agreement, no interest on capital. Okay, according to this, no interest on capital. Okay, but if there is agreement between the partners have agreed to take charge interest on capital, so they need to charge. Okay, so interest on capital means organization has to give those interest on capital to partners, because partners are investing capital. Okay, so organizations are rewarding them for giving capital, so that's the expenditure for organization. Okay, so partners are receiving from whom? Organization. So organization expenditure, so it needs to be deducted. And salary, so if there is no agreement, see here, see, if there is no agreement, no salary, they are not entitled for salary. But if there is agreement, okay, partners agree to provide salary to some of the partners because they are contributing more, they are giving more time, they are taking care of the organization more than others, so obviously they might agree to pay salary to them. So in that condition, organizations can pay salary if there is agreement. So organization has to pay salary to the partner, so that is the expenditure. Okay, so this is less. Okay, I forgot to write here, this is less partner's salary. Okay, we'll write this, and after adjusting all this thing, we'll discover profit to be distributed. Okay, and these profits are distributed equally if there is no agreement. See here, profit and loss, they are distributed equally. Okay, but if there is agreement, according to the agreement, whatever is the ratio, they distribute the profit according to the ratio, and that's how the profit entitled for each partners are calculated. Okay, so remember, take a note of it. Appropriation account comes with salary to the partner, interest on capital, and interest on drawing. And then we discovered share of the residual profit, that is share of individual partners. Okay, thank you, see you in the next tutorial. Bye bye.